It is, and I agree with Josh. And by the way, the difference between XBI and IBB is going to have more of the COVID exposure type stocks, and maybe that's fine, but I think maybe even splitting the difference and owning both of them makes sense. But I agree with Josh. I see a lot more positive catalysts for biotech than we have seen last year. So, but by the way, if you look at the valuations of biotech, they're half the S&P 500 right now. And the reason for that is there's this perpetual overhang of regulatory reform, drug pricing that's going to be destructive for biotech. But if we actually get the Build Back Better plan passed, what's in there is a pretty constructive drug pricing provision that's not going to be egregious. And so potentially you could have the overhang of drug pricing concerns once finally kind of go away and not away on those valuations. So that's one big catalyst that I'm looking for. The second one is just pipeline of drug approvals. That should accelerate once again. We approved the same number of drugs last year as we did the prior 2 years, but guess what? There's 48 different drugs that are waiting. They're in the pipeline. There are clinical trials that weren't able to be conducted. There are inspections that had to be on hold because of COVID. But as we recover from this post-COVID world, I think some of that activity resumes. So I think there's a lot to like. Clinical trials that are all-time highs. And if some of those are successful, you could see the revenues of the biotech, the Nasdaq biotech index, almost double in the next several years. So I am a buyer of this. And by the way, JP Morgan healthcare conference is next week. I think that could be a good catalyst to start looking at biotech stocks here.
Hey, Bryn, you're up next. But before you lay out your picks for us in the stock summit, obviously I thought of you when Josh told us about this Roblox buy on New Year's Eve, because you're the other one who has owned it as part of the committee.
Yeah, I've owned it since I think it direct listed earlier in 2021. What we're doing, and I do think volatility will continue this year, and so I love the Roblox story. What we're doing, though, is today you could sell the April 115 calls, and you would collect around $7.50, which is about a 7.8% yield, and you still have close to like 25% upside. So over the next 4 months, you could sell that call, collect, once again, 7.8% yield, still have plenty of upside, but take advantage of that volatility, because I think Roblox is a company that has a lot of volatility, will continue, and so take advantage of that and earn that income along the way.
Let's talk about your picks for the 2022 Stock Summit. The Global X Lithium and Battery Tech ETF, that's the LIT, Viper Energy, and Coinbase, of course, using your strategy that you've told us all and hopefully taught us a little bit about risk management in the market. Is Coinbase with covered calls?
Sure. And so I'll start with Viper Energy. Viper was actually one of my stock picks last year, and Viper is a oil royalty company. They own royalty rights in the oil space. The stock was up about 90% last year. Right now, throughout last year, they had about a 6.25% distribution yield. And what's interesting is they had some really big hedges on that they had put in 2020, where they had capped their oil exposure to around 45. Those oil hedges are rolling off in the first and the second quarter. And so I think throughout the year, as oil prices stabilize to go to the upside, you can see a lot more increased cash flow, and they distribute 70% of their cash flow to investors. And so I think not only could you get some really nice capital appreciation, but I could see them having a distribution this yield upwards of 9%. So I think there's lots of optionality. And with energy prices, I think flat to going higher, it's a great company to capitalize on that.